Okay, you guys, so in this video, we're going to talk about Crocs stock. So one of you guys out there recommended that we talk about Crocs. So if you guys want me to cover any stocks, just let me know in the comments and I will do my best to make a video on it. So what happened to Crocs today? Well, Crocs reported first quarter earnings and they weren't very good. So the stock has been absolutely crushed. So as you can see here, this explains the big drop in price. So the stock is down actually 17% today. And this is actually part of a long-term downtrend for Crocs. So as you can see, the stock is down over 54% from its previous high, taking a look at the 3-month chart. And if we look at the 6-month chart, we can see that the stock has basically been cratering. So why is this cratering, guys? Well, Crocs is responsible for declining sales, and I'm going to talk a lot more about that once I dig into the numbers. But so make sure you watch this video for its entirety so you get my total outlook on Crocs stock, and then at the end of the video I'll let you guys know whether I think it's a buy or a sell. So first of all, a lot of you, if you guys are new to my channel or you're new to investing, you might not be actually sure what Crocs is. It's not one of the more popular talk stocks, and the market cap is only around $1 billion. So I think it would make some sense to kind of give you guys some background on what exactly Crocs is. So here we are at the website. You guys can check it out yourself. It's CROCS.com. And basically what Crocs is basically they revolutionized the traditional sandal. So basically they're a sandal company, but they do sell different types of footwear for work and boots and things like that. But their core product is this basically clog. So why is Crocs so popular? Well, people say the shoe is very comfortable and it's very lightweight and things like that, water resistant. So it has a lot of properties than just a traditional pair of sandals, where if you just bought a cheap pair of sandals at the store, obviously most people go through a lot of sandals over the years, but with a Croc sandal, apparently it's a lot longer lasting. So that's kind of a background on the company itself. And basically, they're not a huge company. So this is one of those smaller stocks that we're talking about where it's not really talked about as much. So let's dig right into those numbers, guys. Okay, so here we are at the latest first quarter release. So guys, I really recommend reading these releases. They're not that long and it can really sum up a lot of the things that's going in on the business and will help you decide whether you want to make this a long-term investment or not. So as you can see here, it says Andrew Reeves, President and CEO, amidst unprecedented market conditions globally, our total revenue held up well with our exceptional performance in Americas and e-commerce businesses that was overshadowed by coronavirus related store closures. Despite this recent softness, Crocs remains a strong, vibrant brand that is well positioned. In the near term, we have no liquidity concerns and have taken quick action to ensure we will be strongly cash flow positive for the remainder of the year. Over the long term, we are confident we will restore our momentum in 2021 and continue our positive growth trajectory. So obviously, this company has been devastated by the coronavirus because they do about 70% of their sales through their retail stores, and I'm going to show you guys some of those numbers just in a bit, but I just want to quickly go through how they've been impacted directly. So as it says, coronavirus has impacted the Crocs business globally, including through store closures and reduced operating hours and decreased retail traffic. Many of the 367 company-operated stores, as well as partner stores and wholesale consumer stores, were closed at some point during the first quarter, and many remain closed today. So in all geographies where stores are closed, doors remain closed until it's safe and in line with local regulations to reopen. At this time, the company estimates that stores begin to open in stages over the next couple of months. So this is going to have a devastating effect on their revenue because, as I mentioned earlier, they do about 70% of their revenue through their brick and mortar stores. So when their stores are closed, they can't earn any revenue. So this is a stock that's been devastated by this pandemic. And it says further, we expect larger decline in revenues in the second quarter of 2020 as the majority of our retail and partner stores may be closed for the whole period. So it looks like they only have sales right now where there's been the lockdown has been lifted, and that's mainly in China and Korea. So this is not good news, guys. This is one of the reasons why the stock has been crushed, and also revenues have basically been on a slow downward decline over the last couple of quarters where they actually had a positive quarter. I'm going to show you guys those numbers in a bit. But first, I just want to kind of go over some of the changes that they've made. So basically, they've just reduced everything. They furloughed a lot of their employees, which means they didn't fire them, but they just told them not to come to work. And then well, that's good that their distribution center is open, but a lot of the work there is providing complimentary shoes for healthcare workers. So as you can see here, they've been donating their shoes to healthcare workers that are on the front line of this pandemic. And they've basically reduced hiring. They suspended annual increases. Operating expenses have been are much lower, and they've basically suspended share repurchases. So actually, they did repurchase about 1.6 million of their shares at $25. So they actually ended up repurchasing their shares higher than the current stock price. So that's definitely not a good sign. But the good thing is that they still have 469 million on the share repurchase authorization. I would assume that the company's management will try to probably wait until the coronavirus will kind of stabilizes and things reopen and go back to normal before they execute on that. And the good thing is, they don't have too much debt, so the company is doing okay. It should easily survive. So revenue was declining from the first quarter 2019. So year over year, that's not good. And gross margin was around 47%. So now what I want to do is I want to show you guys exactly whether they're going to survive. So if we can just simply go down, and I'll show you guys some of the numbers on their balance sheet. So the company is currently holding around $107 million in cash, and they don't have too much long-term debt. So their long-term liabilities are around 742 million. So, and with retained earnings is positive. So one of the things I do like about Crocs is that they're a pretty lean company, and that the fact that they're not holding on too much debt, and they do have a decent cash position. And like I said, this is a smaller company with just $1 billion market cap. So what I want to do is I want to talk about some of those numbers that I was mentioning earlier when it comes to basically the brick and mortar versus digital sales. So as you can see here, digital sales percentage, they earn in the last quarter 30.1% of their sales online, which means 70% of their revenue has basically gone to zero. So this company is not very well positioned in terms of a company like Amazon or Shopify or Chewy or any of these companies where they're generating the majority of their revenue through the internet. This company has been grossly affected by this retail shutdown. So then now what I want to do is I want to talk a bit more about what I was saying about their declining revenue. So I'm going to head over to Yahoo Finance. I'm going to show you guys those. Okay, so now I'm on Yahoo Finance. So I wanted to address something that was kind of a red flag for me when I was taking a look at the stock. So as you can see here, they've suffered declining revenue over the last 3 quarters. So a decline in revenue and a decline in revenue. So basically, that's two quarters in a row that the revenue's gone down. So the good thing is that in Q1 2020, the total quarterly revenue was up. So it was went from 262 million to 281 million. But the problem with this is that this quarter was the holiday season. So it just kind of is a bit frightening, a little weird that they suffered much lower revenue during the holiday season than they did in the middle of the year. And even though that they had a boost in revenue in the latest quarter, they're going to have much lower revenue. And this revenue in Q1 was still down year over year. So Q2 should be disastrous because that's when you're going to see the biggest effect in these companies when it comes to their revenue. 70% of their stores are basically closed. So for me, this just makes Crocs, just doesn't make it an attractive investment for me right now. And then I want to show you guys one more stat that I really like to look at, which is trailing returns. And as you can see here, we just find this on Morningstar.com. You just type in the symbol CROX and go to trailing returns. I really like to refer to this as kind of clarify things. The stock is basically returned 5% over the last 10 years. So obviously these numbers have been grossly affected by the whole coronavirus pandemic. As you see, the stock is down 53% year to date. But I think that, Crocs stock definitely has some opportunity, but for me, the stock is a sell. Now, the reason why it is a sell is because, as you can see here, we take a look at the chart. I want to show you guys, make this a little bit easier to see. So if we go to the 1 month chart, actually, let's show you the 3 month chart a little bit better. Okay, so as you can see here, the stock basically bottomed out at around $8, around the $8, $9 level. That's where the support is. And now it was hitting resistance at around $24. So now this stock is headed much lower. Remember now, they already gave negative guidance for Q2 2020. And the stock already tanked around 17% with the bad earnings, and the Q2 earnings are going to be even worse than Q1 because remember, a lot of these store closures happened basically towards the end of February. So they still had basically all of January and the majority of February to generate revenue. And now with Q2, most of these stores have been absolutely closed so far the first 3 weeks of Q2. So this stock has a lot more room to fall, and I wouldn't even consider buying until I see it around the basically the $9 to $10 range because I believe it's going to fall a lot further. So like I said, my recommendation for this stock is sell. Be careful with this stock, guys, because Q2 is going to be very, very brutal for this company, much worse than Q1. So the stock will probably fall much further. Okay, so now we take a look at the 1 month chart. As we can see here, the stock is already on a downward slope. So there's a couple ways you could play this. Since the CEO already, basically had negative guidance for Q2, you could buy some put options here and profit on the downward movement. But for me, this is a sell. I wouldn't even think about buying the stock until it approaches around $10 to $13. It's way too expensive at its current price, especially with sales that are expected to fall much further. So I hope this helped answer your question. I think Crocs is a really interesting company, and I think they make an awesome product. But I think this stock right now is too expensive, so my recommendation is sell. But of course, guys, do your own research. And if you guys are a long-term investor, I think there is some potential for Crocs stock, even though they've been struggling over the past couple of quarters. So do you really think that they're going to basically be able to compete with some of these other e-commerce realtors and things like this? I think you'd probably be better off just buying Amazon stock if you're just trying to profit from a company that basically sells things online. I think Amazon is probably your best bet, and Amazon's track record obviously, speaks for itself. So that's it, guys. Hope you enjoyed this video. Smash the like button if you enjoyed it, and hey, subscribe to my channel as well because I post free stock market videos on hot stocks to buy, and also I cover the stocks that you guys mentioned in the comments section. So if you guys want a stock that you want me to cover, you can just type in the ticker symbol or the name, and I'll do my best to make a video on this because I make this channel for you guys. I'm here to cover what you want to see, so just let me know. And the reason why you should also subscribe is because I post videos on a regular basis, basically every day, so you'll want to receive future updates for free by just hitting that red subscribe button. So that's it for now, guys. I hope you enjoyed this video. Take care.